Hi, this is Jim Kennedy with Divergence Analysis, and this is the broadcast for Thursday, March 1, first day of the month. And what a first day it is. Um, just in case anybody's been under the bed all day, Trump announced tariff increases on steel and aluminum today, which caused a little turmoil in the market. So, but this being the first day of the month, what we always do is look at the macro page, and that's exactly what we're going to do. Dow's down. I mean, it's been down like another 100 or so points, down 458 now. So I will show you the pressure. We'll look at the pressure just so you'll know. 37% buying, selling pressure in the New York Stock Exchange, 70% selling in the S&P, 10% selling now in the Russell, 70% selling in the NDX. Now, this is kind of a shockwave thing. Still risk off, as we said, on New York Stock Exchange and Russell. Our models are still risk on the S&P and NDX. So that's as far as we go into the daily routine. Okay, so the futures, what we see here, we'll go over this a little bit in more detailed, and we'll go over the rest a little quicker. We're looking at anything where the differential is above there is in an uptrend force, okay? And here's the weekly. This is a little different than we've been doing. Just looking at the macro, the monthly. We're going to look at the weekly to see kind of a little bit more up close, if anything's happening. And as you see in this volatility that we started from January's high and then February's volatility, up and down, stayed green. I will tell you the market was down considerably before this bar turned red on the monthly. Still very much in an uptrend force, very much in uptrend, short-term uptrend. But as you saw last week or last month, we talked about this. If the leading, which is the blue line, crosses below, gets into the histogram, that means the force part of this move, which began um, March of 2016, is over. Okay, so that's the signal we're getting. We got real close last time. Um, we actually did get it last month by the end of the month, a little below that green bar there. So we got it, and now we're getting a little more. So red bars, and you see the weekly here. It's here's the current price. It's below the stop line on the buy cycle. All the long terms, and we'd look more at the weekly long term, is still up. Weekly short term has been down for 1, 2, 3, 4 weeks now. And then this week we are ending the uptrend force on if this holds, we're ending the uptrend force on the S&P. Okay, we're going to look at the cash. It's going to look the same way. We've been in these things. If you look at the radar screen over here on the left, we've been in this last buy cycle right here, as you see right here, for 23 months, up 30%. So, we're pretty rich on the scale of things. So the cash looks just like it. We're going red bar. We don't have any real big, huge signals. And we look at the weekly, and that's the volatility that we started after January's high, and now we're still continuing it and spilling over into weakness into March. Okay, here's the New York Stock Exchange. You see about the same thing on the indicators, except the New York Stock Exchange is about to go into a weekly sell cycle, and it's going to be confirmed by the differential here. Okay, it may not do it by tomorrow, which is the week's end, but it'll probably seriously do it next week. Okay, and the Russell, what you see, the monthly short term is down, turned down this today, starting today. And the last volatility in February came all the way down to the pivot on the Russell, and now we bounced back up, and now we're starting some more weakness that's even showing up as a little weaker. So differential here on the weekly is already below zero, and so you can look for more weakness there. NQ futures, they're just the macro picture, they're in real good shape. I want to go back here just a minute. Anytime there's a red bar, and you can see where coming into 2014, 2015, 2016, when we really had some real volatility and downside, we had a lot of warning. We had a lot of red bars. Finally broke sustainably below the pivot in August of 2015, and then started a real volatile period of time in the market until we made a bottom in 2016 in the spring. So this is the first time, this is the first red bar that's shown up. But anytime a red bar shows up, you got to look at the monthly pivot as its initial target, okay? And that's about 150 points or so down. So call it 100, 150 points, and that could happen. It could happen quickly, it could happen slowly, it could happen all kind of different ways. But when the bars start turning red, we start really planning on weakness to come in and hit the market. Where do we see that it's really going to come in? I'm going to go back to the last time we built up a lot of weakness. I want you to look at the differential. Here's the uptrend force, even on the monthly. Here's where the real weakness, when it broke the pivot, which was right here, and the uptrend force was over. And then actually you see another thing here. You see the leading on the short term, the blue line actually went negative, zero there. That's the bigger break, not the long term. And as you see, we didn't really do anything bad here. We just had a lot of volatility and pulled back 10 or 12%. So that's how we gauge what's bad. So we're not seeing any of that um, develop right now. So what we're looking at is you look at smaller models and just say, okay, we're going to play volatility. And I think that's what we're in for, is we're in for a much more volatile market, but we're not ready to, enter anything that anybody would call real bearish yet. You probably hear that on TV, but not from me. Um, so there's the NDX, still in good shape, no red bars or anything. Even the weekly is red bar, but it's even above the pivot here. So we're just not having that kind of damage show up. Here's the NASDAQ composite. Here is the transports. You can go back and stop this video anywhere and kind of really just pause and take a look at all these things. Here's the energy group. We're going back into a sell cycle here, it looks like. We're below zero on the monthly. You can see where we're broken down on the weekly. So, and then the long-term monthly has been down for a long, long time. Even we've had some really good rallies in energy group, but not on the macro. Okay, here is the financials showing a lot of strength since 2016, and now we got a red bar today. It's still in a buy cycle, still everything pretty good weekly, so I mean acute warnings there. And there's technology. Of course, we know that's still expanding. It's weak up here, so you really got to watch that. That is not good. And it's expanding, so we don't get too worried about it, but we can have some real volatility kick in there. Healthcare, XLV, on the macro still looks good. It's been explosive for over a year now, way over a year. Just took a few breathers and everything, really never really contracted too much. And you look at the weekly is coming down toward the differentials below zero here. So we can look for a sell cycle here, and we can look for a little deeper numbers here. How deep depends on the weekly long term as we'll look, day to day. Industrials, just a red bar here on the macro. So this is, again, this is the first time we've seen trouble pop up on the macro. Here's consumer staples macro. Now that is kind of getting weak and breaking down a little bit more. I would expect that to rebound some, but it is definitely got some pressure on it right in here. XLY consumer discretionary is in good shape. Not even a red bar here, but sometimes you can't concentrate on everything in one day, so we might look for that to come into play in the future here. Materials, a good global thing to watch. XLB, red bar. The pivot's going down right now. That can change during the month if we get more pressure. The pivot can turn back up. This is a better sign than it turning up, because turning up means it's coming up toward prices, toward a convergence with prices. And right now it's turning down. This is the first day of the month, though. So materials are in pretty good shape. They're broken on the weekly though. And the differentials a little bit below zero, so you can look for more volatility, more pressure there. XLU, same way. this is getting kind of long, so I'm going to go bonds. Bonds have been under pressure for a long time on the macro. They still are. We're not really in huge trouble yet. This baseline's still going up, but the algo's below it, so we're really on the negative side of things here. And there's a picture of the 10-year, which is a little more pronounced. 10 years also on the macros in a downtrend force, and then the 5-year. Also way in a downtrend force and a lot further below. And you look at the weeklies there, and they're all in bad shape. Junk bonds also in a sell cycle. The long term has been down forever, and you're seeing some more pressure on the weekly here. Currencies, we looked at, we've been rallying on the daily, but here's the macro picture. The macro picture is still very negative, still in a downtrend force. Still red bars, sellers are in control. Still a good bit of selling overhead in the thing in the monthly cycle, sell cycle, as well as the weekly. Okay, so we're probably coming up into pretty good resistance, hitting this weekly pivot right here at 90 spot 55. That's about what we see. Okay, let's see. Okay, the euro is doing pretty well macro wise. We're having a little weakness in here daily and weekly, as you see, but it's still in good shape. And macro is still real strong, and probably even looking stronger. So we don't have to worry about that. Yen started its buy cycle this month. This is the first time of a true cross. This is really broke out of the sell cycle. So we're seeing long term kind of try to come on up above its baseline. The differentials above that. So yen looks up. Weekly is very strong on the yen. So the yen looks up. Pound, this is a paused buy cycle, but and we're seeing the long term is just kind of lollygagging around below its baseline. It's not making a move here. This is in an uptrend force, though, and as long as we're looking at these green short-term trend bars and if the weekly, if the leading line particularly stays positive, stays above zero, then we're going to think the pound can work its way up. Here's gold. Gold's been just a mess on the macro. It's been doing all this kind of stuff. We look for a triple breakout up in here and hadn't really seen it yet. And we're just got no power in gold. Here's the uptrend force. And last time we saw power in gold was in 2016. And then it's just been really consolidating. Somebody can probably make a triangle out of that. We let the indicators just point the way. So we're pretty much neutral on gold here, neutral to positive, not negative, but neutral to positive on gold. Silver is, hadn't looked as good. It's been in a sideways kind of pause sell cycle. Long-term monthly's been down, long-term weekly's been down. So it's never really made a move since 2016. And so we can, and that's expanding again. So we just don't expect silver to make a move. Gold is a completely different animal nowadays. Natural gas, still in a big sell cycle macro wise. We got some green bars in here. I think these are the lowest prices in a long time, since December anyway. And so, people are liking these low prices, but we don't see it in the indicators really taking off here. There's nothing in here that says we're going to really blow up through here. Not even on the weekly, really. So weekly's getting a little closer maybe, but not yet. Okay, so then finally we look at crude oil. Crude oil on the macro started looking good in September last year, broke above the stop line in October, went into a buy cycle in November last year, and still looking good. Kind of paused here. It's not expanding anymore, but it's in a power mode. It's in uptrend force. And it's still in good shape weekly. You look at all these things, they're pretty, even though the trends are right here, it's just kind of going sideways, which is consolidation because it's all happening within the buy cycle. But, the main things we look at on the macro are the differential above zero, that puts it into plus mode. We want to see this trend, this bars go positive as well as the leading. That would make it even more powerful. And then, of course, we're looking at the long-term monthly. It's a very, very slow process, but once it gets above its baseline, then then we're really in a bull market. And we're not seeing that yet, but prospects look good. I'm going to really quickly, this is long, we're going to really quickly go through the weekly. I'm just going to show you the monthly. Okay, here's the monthly stock map, and you can stop and look at all these changes here. And then here is the monthly aggregate page where you can stop and look at all these kind of levels or anything that's changing with a zero here, green or red, unless these red zeros. Okay, so that's the wrap up for the first day of the month, and getting a lot more volatility in the market, and we expect to see a lot more ahead. Talk to you tomorrow.